Welcome to a new video of Tradomics. My name is Dario, and in this episode, we're gonna run through all the main US indexes. As you know, this is a channel that is particularly focused on the stock markets, especially in the US, but not only limited to that region. But in order to better understand to which point in time all the stocks are, especially whether they are synchronized among them or synchronized compared to the indexes, then we have also to study the indexes to have a better understanding of the prediction and the forecasting regarding the future direction of the price. As usual, we want to use the T cycle analysis. It's a methodology that if you're interested to know more about it, you can click on the pop-up menu on the right-hand side. So let's dig into the main indexes, Nasdaq, Standard & Poor's, Dow Jones, and Russell 2000, by starting with the Nasdaq 100. So in the last analysis that we issued, you can always click on the right hand side to go to the previous episode. We put on purpose this arrow here because we were expecting to close a T plus to a monthly downward cycle. And this is exactly what happened. So basically, with the low occurred on the 19th of April till the low of 30th of May, we have had 28 bars. Therefore, we generated a new T plus 2 with a further push to the upside. So then we can update the chart by putting the T plus 2. And we also said that this was a short-term retracement because given the fact that the upward cycle T plus 5 was broken here, we could have had time to extend the cycle. We could have had time to extend the cycle, but we were expecting already to come back to the top because with this retracement, the time was not enough to close at T plus 5. Therefore, I was saying that we could have had a retracement, but then we would have expected another downward cycle T plus 3, T plus 4 that could push the price further to the upside and break up this swing to continue the upward cycle. This is an information that you can find also in this channel. You cannot find this information anywhere else unless they apply the cycle analysis with our durations. Therefore, it was basically a competitive advantage to open long position in such retracement because that's what happened. Now, what we can say about it. So if we gauge the overall duration, first of all, we have to realize that we have 227 days, which is already a duration that can be uh, mm, already existing within a T plus 5. Therefore, we have already the sufficient and necessary condition to close a T plus 5 and then what? To begin a new upward cycle with further push to the downside. But we have also to contextualize or to frame the chart because from this top we have had a T plus 4 and this T plus 4 has arrived at up to 57 days. Now the T plus 4 has been segmented in the Matryoshka framing in the first T plus 2, and now we have a new T plus 2. Therefore, we expect this rally to continue over the short term up to 24 days. That would be the minimum duration, the worst case scenario. So we expect the rally to further extend its gains until the 27th of June. And in the best case scenario, as for the legend below, we can extend the rally up to 44 days. So we can have even a scenario where we can have extension on the rally until the 26th of July 2024. After this, we will have to be aware that a T plus 3 can be generated. So one T plus 2, one monthly upward cycle plus another monthly upward cycle can generate a 3 months upward cycle with further push to the downside, and also to close a T plus 3. Therefore, by end of this month, and so between the end of this month and the end of the next month of July, please be aware that further retracement can happen. Okay, but until the 20 until the 27 of June, this is 25 bars but to 24, until the 27th of June, with the first candle of the new cycle potentially on the 28th of June, we expect to further extend the rally. And of course, we will extend the rally also by closing the downward cycles over time. So that's the situation we have on the Nasdaq. This is really valuable information, because by looking at this video, you know how much the rally can be extended in time, so you can manage your positions. Regarding the Standard & Poor 500, we said during the last analysis is that there would have been a return to the tops for the same reason of the Nasdaq. So here we didn't have enough time to close a T plus 5, but just a T plus 4. Then a new T plus 4 was developed. And also in the last analysis, we said that we would have expected a first T plus 2, then a retracement, and then return back to the top. So that was basically the pathway. And this is exactly what happens. So here with this swing, we created a new T plus 2. So you can see that Nasdaq and SP 500 in terms of time, they are synchronized. And this is important, because if you have some stocks that are exactly following that pathway, that would be also the conclusion. So let's now remove all the arrows. And now what we can say. So let's remove this one and also remove this one. So we have added a new T plus 2, and then we are generating a second T plus 2. So also here the story is basically the same. We can extend the rally of this T plus 2 until 24 bars at least, so until 27th of June, and at most end of July, if I'm not mistaken, 44 days. Yes, until 26th of July. So we further extend the rally, but of course we will need by next month to start closing a T plus 3. So as said for the Nasdaq, please be aware after the 26th of June to be prepared in case of further retracements. And other things, and that's basically the situation. So Nasdaq and SP 500 are basically at the same point in time. So if we move to the Dow Jones has a slightly different situation. Dow Jones has a slightly different situation because we said during the last analysis that this could have been a Bayer tongue. So basically a cycle, an upward cycle in this case, that was between or encompassed between two yearly upward cycles. And here we have a total of 18 bars under this top. So here we can say that this is at least a T plus 3 upward cycle, if not something more. We are basically expecting either a basically a continuation of the rally if we can go over the stop within before 3 months. But if we go back to the stop over 3 months, here we are expecting a T plus 5. So if here we have a T plus 5, we cannot go back to the stop before 3 months at least. So we said also that we were expecting this move in order to close a T plus 2 and then another T plus 2. So basically what we've seen here with the Standard & Poor's, okay? This first T plus 2 and then another one. But on the Dow Jones, we are seeing less push or less strength. Therefore, here we have to be a little bit more careful because we don't have the certainty to extend the rally. But here we have 18 days. So from this top from yesterday, we could see potential retracement. So this top is a checkpoint whether we can extend the rally in the next day. So if we go back to the top, we can extend the rally and then close at T plus 2 and then further push to the downside. Or be aware that this is a checkpoint. So if the price goes lower the low at $38,446, then we would expect a cycle of this shape. Okay, so here we cannot actually predict in the next days what the direction of the price will be because we have to keep monitor the two levels. So the first one, as said, at 39,120, this is the top, and here the lower point at 38,446. So if the price goes up here, we can extend the rally, but if the price goes down here, we can further retrace. Of course, you always have to calculate the time because if we go upwards or if we break this this high before 7 days, then we can extend the rally. But if we break this high after 7 days, then you need to be careful. Then the time will be already run out in order to extend the rally. So you have to be careful at managing your position after the 7th day. The same as for the downside. Okay, so here what I can put is that we can remove basically the arrows, and what we can put as an alert is to monitor these two levels, one for proceeding the rally to the upside and another one to the downside. Okay, in the at the same time I can update this is a T plus 2, and you can also check every time first weekly upward cycle, second weekly upward cycle. Okay, and actually if you gauge the time, you can always find the right, so 11 days here, which is basically the maximum duration, and of course here the same 7 days. Okay, so let's keep this two level monitored, and let's see what is going to happen in the next days. Last but not least, Russell 2000. So for the Russell 2000, we have similar situation as of the Dow Jones. So here we have already evidence that this might not just a T plus 4, but also a T plus 5. Have said, as said during the last analysis reported in March, we have had the first T plus 2, and then we closed also a downward T plus 2 like this as of 36 days. Now what we expect over the short term is we have to stay over this minimum for at least 7 days, so the price can actually do something like that. And if we break this swing already, then we can have further push to the upside because we are basically having 53 bars under this top. Therefore, in the next weeks, we're gonna expect to also close at T plus 3. Okay, and in order to close at T plus 3, here we have the first TU weekly upward cycle. Then here we have another weekly upward cycle, and let's see now whether we can have another push to the downside and further up. Okay, so here the probability to have a push more to the upside is more probable, because from this low we are expecting a T plus 2, then a push to the upside, and at the same time we are expecting to close a T plus 3. Okay, so here mostly for the next weeks we can expect a further push to the upside. And here I can also put an arrow where, considering the T plus 2, we have to spend at least the next week over this minimum. And this minimum is at $2,027. So that's the situation for the time being. I hope that this analysis has given you a lot of insights. If you want to subscribe to our channel to be updated on the latest analysis, please click on the bell. And of course, for all this work done for free, some likes or comment are always warmly welcomed. So thank you very much for watching, and see you to the next episode.